In this video, I'm going to show you one of my favorite trading strategies that I've been trading for years on end. It's an easy to understand trading strategy that can be used as a scalp trading strategy, but also as a swing trading strategy. Whenever I have accurately predicted the top or bottom of markets throughout my career, it has almost always been using this exact system. Now, to begin with, I'm going to show you an example on a drawn out chart to make sure that we're all on the same page. So what we're really looking for with this very strategy is liquidity sweeps, but a lot of people have trouble identifying a liquidity sweep versus a market structure shift. So what this trading system does is it allows you to tell the difference between a liquidity sweep and a market structure shift. And so the whole idea here is that we are buying lows when they are swept and we are selling highs when they are swept. Now, of course, we have to have rules that tells us exactly when we need to buy the lows that are getting swept and when we need to buy the highs that are getting swept, because hundreds of highs and lows are getting swept on a daily basis. So throughout my years of trading, I've been able to recognize a pattern that will tell me what lows I need to buy and what highs I need to sell. So the way that I do this is very, very simple. I pay attention to lows and highs that are made within imbalances. So I want you to imagine that this low that we're looking at right here is a low that has been printed within an imbalance or a fair value gap. Right now, the market has made a low, and what we're going to do is essentially anticipate that this is going to give a massive reaction to the upside. So the trade setup would look something like this, okay? It is essentially buying lows and selling highs, as I just said. And this really allows you to get extremely precise entries and allows you to catch the bottom and top of markets. Now, what I really like about this trading strategy is that it will tell you extremely fast whether you are right or wrong. So what I mean by that is you will either hit take profit or stop loss very, very fast, which means it is not a very emotional trading system, which could benefit a lot of people. Also, before we get too far into the video, I'm currently traveling, which is why the microphone might not be as great as it usually is, but all we can do is, of course, appreciate the view. Again, I wanted to record a video even though I'm traveling, so you're just gonna have to bear with me in terms of the microphone. Now again, back to the trading strategy. So this right here is essentially exactly what it looks like. All we do is look for the lows and highs that are being created within imbalances. And all I really pay attention to in terms of my stop loss is this. If the low that I'm buying or the high that I'm buying has hit the middle point of the imbalance, well, then I have to include the entire imbalance in my stop loss. So to show you exactly what I mean, this low right here has just exactly hit the middle point of this imbalance, which means my stop loss has to include the entire imbalance. Now, let's say that this low was made right here, meaning it had not hit the middle point of the imbalance. Well, then technically I could have such a tight stop loss. Now, again, when it is such a small imbalance, you might as well include the whole thing. But if you are doing this in very, very large inefficiencies, well, then this stop loss rule becomes very, very beneficial. So again, if the low that I'm buying has hit the middle point of the imbalance, I include the entire imbalance in my stop. And if the low has not hit the middle point of the imbalance, well, then I technically do not have to include the entire imbalance in my stop loss. Now, of course, when you trade very, very minor and small imbalances, you might as well include the whole thing. This is more meant for large inefficiencies in the market. Now, I've been getting a lot of questions in regards to what crypto exchange do I use to execute all these trades. The exchange that I use is called 2bit, and the reason why I enjoy 2bit so much is because of its simplicity. I've tried out the majority of crypto exchanges, and a problem a lot of them share is that they are simply too complex for no reason. Now, 2bit, on the other hand, their support team is great, it's very simple to use, and by simply signing up with the link down below, you will get a free 50 USDT. So if you don't have an exchange yet, or you're looking to change, I would highly recommend that you check out 2bit down below. Now, I have experience trading this strategy in the stock market, futures, forex, and crypto market, so I can confidently say that this strategy works in the majority of markets, and it has made me thousands and thousands of dollars publicly. So if you've been looking for a profitable system, look no further, because I guarantee you, if you trade this long enough, it is going to make you money. Now, let's take a look at the first example. So the first example is going to be a trend continuation example. Now, typically with this strategy, you use it as a reversal strategy and not as a continuation strategy. However, I wanted to include this example as well to show you that you can actually capitalize on trends even though this is supposed to be a reversal system. What I mean by that is, if we take a look at Ethereum here, we can obviously see that it is in a clear uptrending market. There's no doubt about it. Now, what I immediately notice here is that we have quite a large inefficiency right here on the 5-minute time frame, and within this inefficiency we have made a swing low, and that is what catches my attention, because now I am super interested in longing off of that swing low. And if I zoom out here a little bit, you can also see that we have a high right here that we can target. So we currently have a point where we want to enter from, and we also have a point where we think price is going next. So all there's really left for me to do here is buy the low, and I'm going to place my entry very, very slightly below the low. My stop loss is going to include the entire imbalance because, again, if I zoom in here, you'll be able to see that the low actually hit the middle point of the imbalance, which again means I have to include the entire thing in my stop loss. My take profit can either go to the high right here, that would be about a 3R position, or you can let it run all the way to external highs up here. For the sake of this video, we'll let it run to the external highs that we have up here. And so all there's left for me to do is play it out and see exactly what happens. And as you can see, we just immediately skyrocketed to the external range liquidity. And that is exactly what I mean. Look how precise this entry was, and look how fast I was told that I was right. So again, very, very little emotions are involved in these trades. They are very, very stress-free because either you hit stop loss very fast or you hit your take profit very, very fast. And oftentimes you rarely go into drawdown because these liquidity sweeps will oftentimes just slightly dip below the low and then immediately rally higher. And of course, if you're shorting a market, it will just slightly go above the high before then dumping to your target. So here we're looking at the second example on a 15-minute time frame. Again, this is not time frame specific. You can trade it on a 15-minute time frame as well as a daily time frame. So this system is applicable for both scalp traders and swing traders, and you don't even have to use it as an entry model. You can also just use it as a directional bias, and so that's why I think it's very important that you add this to your arsenal. Now again, what we're looking for here is obviously a short, and in this case we have a 15-minute imbalance right here, and we have a target for this trade as well, which is going to be the low that we're watching right here. So again, we would have been filled right here with this very candle. So I'm going to enter right when it sweeps the high. My stop loss includes the entire imbalance. Now notice how this high did not hit the middle point, and so why is it I include the entire imbalance in my stop? Now the reason for that is if I didn't want to include the entire imbalance, my stop would look something like this, and it might work sometimes, but it is just not worth it in the long run. So this rule is primarily for very, very large inefficiencies in the market. So with an imbalance like this, even though the high that I'm selling did not hit the middle point, I am still going to include the entire imbalance in my stop loss. Now let's play it out and see exactly what happens. And boom, as you guys can see, we were not confused in the slightest as to whether we were right or wrong. We were barely in drawdown and we hit take profit very, very fast. And that is exactly why I love this trading strategy. It allows me to see the difference between a high probability high and a low probability high. So again, a lot of traders don't know when a market is simply going to rally above a high or use it as a reaction to go lower. And that is exactly what this system allows you to do. It allows you to tell the difference between the two. Now, the last example that we're going to be looking at here is an XRP example. Okay, and this example is a little bit different because if I mark out the entire imbalance right here, you can see that the low that we've made within this imbalance is extremely close to having filled the entire imbalance. Now, something very important to understand here is if the entire imbalance has been filled, meaning if this wick looked like this and the entire inefficiency was filled, that immediately cancels everything, okay? We do not want to soup a low or buy a low that has filled an entire inefficiency. These lows are called intermediate term lows, and they are very, very often protected. And so if we sweep an intermediate term low, chances are the market is very bearish and we're just going to go lower anyway. So it's very important that you understand, do not buy lows if they filled an imbalance, and do not sell highs if they have filled an imbalance. Now, of course, this one has not, even though it's very close, there's still inefficiency left. So what I'm going to do is buy that low. I'm going to keep a fairly tight stop loss, and my take profit is going to go straight to the high. So let's play it out and see exactly what happens. And as you can see, just like the other examples, it played out perfectly. Now, it's also important to remember that these are cherry-picked examples. You are, of course, going to have trades that fail. If this system never failed, well, then I would be a billionaire. And unfortunately, I'm not a billionaire yet. So that was me explaining one of my absolute favorite trading strategies that I have traded for years on end. And again, I apologize for the mic quality. Usually it is a lot better when I am home in my office. But when I am traveling, all I can do is use the equipment that I have. So I hope you enjoyed watching. Leave a comment down below if you tried it out and whether it worked for you or not. Make sure to like and subscribe if you enjoyed the video. And without further ado, I'll see you in my next video.